So I get asked this question quite a lot, and let me just emphasize to you, I can't give you financial advice, I can't give you legal advice, this is just my opinion. But if you want to hear my opinion, because I'm pretty experienced, then great, incorporate it into your own thinking, and do take legal and financial advice from your lawyers and from your accountants. People are asking me a lot about Section 24. If you haven't heard of it, it is the, and I'm going to say this, highly unfair tax that George Osborne installed on landlords, whereby they can no longer use the interest for their mortgage as a cost, and that tapers down until 2020. I'm happy to pay tax. I'm happy to pay for schools and hospitals, and I genuinely see it as a deeply unfair tax. But there you go. No point railing about it. Question is what you do about it. These are the ways that I see people dealing with it. Some people have gone the incorporation route. They've taken their properties, they've incorporated them from owned in their personal name into a limited company. They've been able to use some above board schemes to crystallise some of the costs they need to pay into the shares. Not something I've done myself, just because I prefer to be a master of my own ship. Second route is pay your properties off. How, Suze? Well, if you're going to stick in property, I mean, I paid one off on Thursday. Yeah, just before I flew out to Berlin. I'm in Berlin just now. So it's really given me a fantastic kick to really smash out paying my properties off this year, which I'm doing with a vengeance, I tell you. So if you do property, why don't you run an additional buy to sell strategy in order to make the profits to pay your properties off? That's one suggestion. The third is something I'm also doing, which is currently this Section 24 tax doesn't apply to serviced accommodation. To give you an idea, we got some flats which are sweet little one-bed flats in the centre of town, and we get $750 for them. With serviced accommodation, we get over £2,000 a month. So I'm moving them to serviced accommodation, which allows me to use the mortgage interest correctly, and also the additional money pays off debt. So it's a nice double whammy, if you like. The fourth, which I am not doing, but some people do, is they're reducing down their portfolio by selling some properties and paying off others. No, I didn't work this hard to have some stinky chancellor make some rules that I believe are highly unfair, but I don't have the power to change. I am simply going to use it for good and actually escalate or speed up my paying down my property portfolio. To be fair, I had a little bit of sulking about it for a while, and then I was like, no, just use it, because I want to get to complete financial independence. I already got financial freedom. I'm in Berlin, I'm going to Glasgow, I'm going to London, I'm going to Barcelona, and then I'm going back to work. But I want utter financial independence. I don't want to have any banks. I want to move that way anyway. So I've taken the bad, and it is a terrible tax, and produced an incentive to improve my journey. So whatever crappy stuff comes your way, you're not big enough to change it, just use it for good. Okay, those are the ways that I have heard other people or myself doing, but do take legal and financial advice. Take care, bye.